what should be the right coverage term. So many people look for the longest coverage term till age 80, 85, 99 and 100, and many plans are available in the market today which offer the life insurance coverage for such longer terms. And many times the customers and people are influenced by the sellers, but the question is, do they really need that coverage term? Probably there is lack of awareness, or they are influenced by the sellers or some or another platform where they see some ads. So actually we need to know what should be the right coverage term, till what age I need the life insurance coverage.
Was ever a list on things we avoid talking about, death probably would top that list. It's morbid, it's uncomfortable, and we might always avoid talking about it. But the fact is, accepting death as part of the cycle of life and accepting that it is the only inevitable thing can help us live more fully. It can help us plan better. It can also help us prepare our finances better for our families. When we think about financially preparing ourselves for life's uncertainties, life insurance is probably the first thing on everyone's mind. The financial burden of an earning member of the family passing away can be immense. However, despite this, a large section of the population today remains uncovered, with India's life insurance penetration pegged at just around 3%. When we talk about life insurance, term life cover is probably the first thing everyone talks about. It is a pure life cover that provides only the death benefit to the policyholder's family in case of your untimely demise. While term life cover is a comparatively simple product, there are multiple things one needs to keep in mind before buying the right term life insurance cover. You're listening to the brand new episode of Insuring India, a podcast by Digit Insurance, and I'm your host, Sabri Saran. Stay with me for this wonderful conversation with Ashok Manwani, who's the Vice President of Products at Go Digit Life Insurance, as he answers some crucial questions related to term life cover, ranging from what is the right coverage, how should one pick the right cover, how should one identify the right insurer, mistakes to avoid, and many more. Listen in. Ashok, thank you so much for taking time out of your busy schedule and joining us on this podcast.
Thank you, Sabri. Thank you for having me here.
So, Ashok, I'll start with one basic question. I know that we are here to talk about term life insurance, but before we get into all of that, I want to know the basic question from you. Why should anyone buy a term life insurance cover?
Great question, I would say. So, see, all of us know that the final truth in this world is that each one of us will have to die one day.
Right.
And almost all of us are having families behind, the dependents. And you know that life is uncertain. One cannot predict when that moment will come.
Right.
And here the risk lies. What will happen to my dependents after me if I die today or if I die too early? Because even after we are gone, they still need the money for running the monthly household expenses, for food, for school fee, for tuition fee, for EMI payment in case I would have taken any loan, and utility bill payments, corpus for children's future, corpus for spouses' retirement years. So these requirements, financial requirements, still remain. So while thinking about why should I buy a term plan, every earning person ask one basic question to himself or herself: who are those five persons, the name of those five persons who are forever going to take care of my family's financial needs in my absence? Forget about five. Can I name one person? Right?
Very hard to name, yeah.
Exactly. So one cannot. So if only one person who can take care of their needs forever, it was you, and you have already gone.
Right.
So in that case, what is the solution? So term plan is the solution. And why term plan? because term plan is the most affordable life insurance product. It gives you very high coverage amount at a very nominal cost. For example, let's say if I'm 35 years old and if I need a 1 crore of sum assured for next 35 years till age 70, it would cost me just 13-14,000 a year.
Okay, it's that cheap.
It's that cheap. So that is where the term insurance cover is required. So term plan basically provides that kind of financial protection against risk of dying too early, and it basically makes the foundation of one's financial planning. Every earning person should do the first thing when he starts earning. He should buy a term plan, and then of course then he go for other kinds of investments and savings and all that, because it gives a peace of mind that if I'm gone, so there's a insurance cover, this financial protection that my family will get, right?
It's like a pure protection,
Pure
sort of.
protection, yeah.
So when we talk about term life insurance, the coverage amount or the sum assured amount is probably the most important thing everyone talks about, right? Like you also mentioned, and how we have seen in multiple ads on taking a rupees 1 crore term cover and how much it costs, etc. I want to understand from you, like, how is this coverage amount decided? How should one choose the right life insurance coverage amount? And is there any maths behind it?
So this is very important question which you have asked, I must say, because you see many people purchase the term plan without actually knowing what is the right coverage amount for him or her,
Right.
right? And because of that, they remain underinsured. And what is the fallout of this? Financially, this could be highly risky for their families, because if such person dies and the person was underinsured, the amount, the life insurance coverage amount which the dependents get, that may not be good enough to take care of their financial needs. So while buying a term plan, while deciding the coverage amount, there are few basic questions the person should ask to himself or herself while buying a term plan. These questions can be: if I die today, what is the amount that I should have in my hand or in the bank, interest of which can be sufficient enough to run the monthly expenses of my family after I've gone? That's first question. Second question: in case I have a loan, right? If I die today, who will pay the loan? Because if I die today, my family will have to settle the loan. So would I like that my family to be harassed by the lenders after me for the loan repayment? This is the second question. Third question: what is the corpus that would be required to take care of my children's bright future, their education, their marriage? In case I was alive, I would have created that corpus. Someone would have already started accumulating the money or investing money for their future. But if I've gone too early, who will take care of that? And what is the amount which I thought of,
These
right?
are like the big financial goals.
Correct.
So to say.
Similarly, what is the corpus I would have required to for my retirement, for my spouse's retirement, in case I'm not alive anymore? So, but my spouse is there, so she would definitely need. She's dependent on me in case she is dependent. So the corpus is required. So what is that corpus? Finally, what is the amount so far I have collected, accumulated? What are my investments so far? So broadly, if I you're asking about the maths, is there any maths behind that? So broadly, I will explain a very simpler way, a broad overview of the maths. So one need to list down all the liabilities. That if I have any loan, what is that loan amount? If any credit card outstanding is there, if there's any other debt is there, and then the corpus amount that you can visualize for your kids' education, their bright future, list down that amount. Similarly, the corpus that you can visualize for your spouse's retirement, and then the amount which you need in bank or in hand to run your family expenses, whose interest can be used by the family to maintain the same life standard to run the household expenses. And currently, I'm not taking inflation into factor. You can consider the inflation also for the monthly household expenses. Today, 1 lakh would be sufficient, but 10 years down the line, probably for the same kind of life standard and same household expenses, 1 lakh not be sufficient. Probably 2 lakh would be required. So that needs to be factored in while deciding the coverage amount, that what money I'm leaving behind for them. So all of these I'll call the liabilities: the loan, outstanding loan, the bill, the money required to run the household expenses, what amount I should have there in keep in the bank, whose interest will be sufficient enough to run their household expenses, corpus for child's education. So I'll call them liabilities, and then I'll list down my assets. That what are my assets so far, how much amount I have in fixed deposits, what amount I have invested in stocks or mutual funds, plus so far what is my life insurance coverage amount. Now what I'll do, if my liabilities are on higher side, I'll subtract my assets from the liabilities, and whatever is the shortfall, that is the additional, that is the life coverage amount I need to have today. So let's say my liabilities, including everything, was 3.5 crores, and so for investments, I have 1.5 crores, so which is 2 lakhs shortfall. Yeah. So I need to buy 2 crores rather than being influenced by what agent says and any seller says on what is being shown in the TV ads.
Have this in their mind that getting just 1 crore cover might be enough, but they might not actually analyze their own set of liabilities and the assets they have before they come to the right coverage amount.
Exactly. Sometimes it is also driven by, let's say, as I said, for 2 crores or let's say for 3 crores, if that is the shortfall or that is the basically required coverage amount basis their needs, family needs.
Right.
So the premium, of course, that would be on higher side as compared to 1 crore. And if I see today, 1 crore seems to be a good amount, but 5 years or 10 years down the line, probably it won't be. So one needs to look at their own financial needs, which may vary from person to person.
So, Ashok, life insurance, as you know, is a long term commitment. You need to pay the premium every year, which is typically a yearly premium that you pay.
Yeah.
And here, age becomes a crucial factor. So, can you tell us what is the right way to choose the correct coverage term? What factors should one consider before opting for that coverage term? Should we keep paying the premium till retirement, till we are 70? Because I've also seen few policies that offer coverage till 99 years. So, how does one approach this?
I will take it to two parts. One, rightly mentioned by you that age is one of the crucial factors, Samri. So, first of all, one should buy the term plan as soon as possible after one starts earning. Because it ensures that the premium installment you pay is low throughout the chosen coverage term. Now, that brings us to the second part, coverage term. What should be the right coverage term? So, many people look for the longest coverage term, let's say, like you mentioned, till age 80, 85, 99, and 100. And many plans are available in the market today which offer the life insurance coverage for such longer terms. And many times the customers and people are influenced by the sellers. But the question is, do they really need that coverage term? Probably there is lack of awareness, or they're influenced by the sellers or some or another platform where they see some ads. So actually we need to know what should be the right coverage term, till what age I need the life insurance coverage. Then there is a second set of people also. They may be few in numbers who choose for a shorter period. Why so? Because for shorter periods, the premium installment is on lower side. Let me give an example. If a person who is 35 years old and he wants to avail a life cover of 2 crore rupees. So if he chooses the coverage till age 100, he has to pay a premium regularly. If he chooses to opt for this 2 crores of life coverage amount till age 100, every year he has to pay, and he's 35 right now. So which means he's choosing life coverage of 2 crores for next 65 years. So every year he has to pay 60,000 rupees if he's supposed to get coverage till age 100. Same customer, same person, if he chooses to have it till age 85, he has to shell out 45,000 rupees every year. If he wants to have the coverage till age 70, it's only 30,000 rupees. Premium reduces because, see, at higher age the mortality cost shoots up like anything, because the probability of dying at higher age is very high.
Oh God. Yeah.
Right. So the premium rate increases sharply. The premium increases sharply at higher ages. So if I want to cover myself at till age 70, if I'm 35 years old, till 70, I will have to pay only 30,000. But if I have to cover till age 100, 30 more years, for 30 more years, 60,000, the premium will double every year, starting from the first premium itself. So this is one of the key point one should consider. Do they really need? Because at the end of the day, from the first premium installment itself, they have to pay higher premium if they are choosing the longer coverage term.
Plus, I think the financial liabilities would also have reduced by then, right? Like if you are 70, 75, you probably at best would need to take care of your spouse. All the other financial goals you spoke about, in all probability, would be done by then.
Exactly, I was coming to that only. So, rightly said by you. So, what is the right approach? The right approach is, because what is the right coverage term? Again, it varies from person to person. Again, it depends upon their financial needs, what their requirements, what is their life stage, right? So, one should, again, here also, one should ask this question to himself or herself, that what is the age at which you expect that your all milestones, financial milestones will be met. For example, your child's education will be over and he'll be self-dependent. At what age your dependents become, apart from kids also, or if any another dependent is there, so they will become financially independent, right? For example, if I'm 32 years old and I've got 1 year old kid, right? So I assume even if he pursue some higher education, so by 25 or 26, I believe that he should complete his education and will get some job. So 32 plus, let's say he's 1 year old, so by age 25, so another 24 years. So which means when I turn 55 or 56, by then my kid's education and responsibility towards my child is over. He will be financially dependent.
Correct. Yeah.
So that can be one of the consideration if that is the only responsibility, the child's education is the only responsibility. Beyond that, if I think that I'll be able to create a corpus which is sufficient enough to take care of my and my spouse's retirement years by age 61, until then I should continue working. So then 61 is the age. So I should have life cover till then, because let's say if the sufficient corpus is not created by then and I die during that period, that amount, life cover insurance amount, will act as a corpus for my spouse's retirement. So this is, and one of the important consideration, if you have taken a loan, what is the period of EMI payment? So these things should be considered while deciding the coverage term. No need to buy coverage till age 100 if you think that my liabilities will be over much before that, because unnecessarily you are paying higher installments from day one itself for that kind of longer coverage.
So you have explained the entire coverage amount bit and the coverage term part also quite well. So is that the only thing to consider when somebody is out there to buy a term cover? What are like some of the things that one should keep in mind apart from the coverage amount and the coverage term when somebody is buying a term plan cover?
Definitely, one should look into some additional things as well, additional parameters, and especially now there are a lot of term plans are available in the market offered by multiple life insurers. So, I mean, in my view, what I suggest that one should do a bit of research before finalizing the right plan, and each one of us do that while buying a term plan. Firstly, one should look at flexibilities which the different term plans are offering, because that will empower you to customize the plan as per your need. Now, for example, many term plans offer option of increasing life cover, where what happens, that life cover increases by 5% or 10% every year, right? So today, if I purchased insurance cover of 1 crore, by the end of next year it will become 1 crore 5 lakh. In second year it will become 1 crore 10 lakh, right?
So it's slightly taking inflation
Inflation,
into
correct, exactly,
consideration.
rightly
Okay.
pointed out by you. So that takes care of inflation. Similarly, one can decide whether I want to have an inflation proof life cover. So there are different sort of people. Many people would, they will charge slightly higher premium for that, of course, but there are different sort of people. Someone would go for level cover where the life cover remains constant level throughout, but some people prefer this kind of cover, that I need to have some inflation proof cover. Secondly, many plans offer the flexibility or the option to add life insurance, additional life insurance cover at a later stage. So today might be I am single, or probably I've just married, and depending upon my income and everything, whatever I purchased today, 1 crore rupees, let's say for example, it's sufficient enough. But 5 years down the line, probably I may be blessed with a baby boy or baby girl, and my income also increases, my responsibilities increases, so I need to have additional life cover. So within the same policy, many plans offer to add additional cover. Today I have 1 crore. 5 years down the line, 6 years down the line, I want to purchase have 50 lakhs more. So within the same policy, I can do the top up,
Okay. So you need not go out and buy separate cover.
separate policy. So,
Okay.
so this is the flexibility. Thirdly, so one need to check whether they offer the different kind of benefit payouts, the manner the death benefit will be paid out. It can be in the form of lump sum, 1 crore lump sum will be paid out. It can be paid in the form of income over next 10 years. So depending upon what your family situations are, if you think that your family or your dependents are not financially evolved enough and will be able to utilize that entire lump sum, so you can decide to choose the income payout option. Okay, through this they will continue getting the income which will be able to help them financially. There are many plans now where the nominee can choose that what payout option I should have, while the policyholder at the time of purchase would have thought that lump sum benefit payout is the right thing for my family when I die. But maybe when he dies after 10 years, so 10 years down the line, the situation will change. Probably the nominees think, no, it's the income payout for 5 years or 10 years what I need now. So nominee has that power to change that. So these are few things. I mean, now many terms and plans have started offering. These are few flexibilities which I just mentioned. So people need to do bit research, because what will happen when they do research, these are 3 4 examples which I mentioned, the flexibilities I've mentioned. May be some more flexibilities, so they can correlate with the any flexibility which they like, and depending upon their own specific situation, they can choose that, they can customize.
Right. I think you made quite a good point because the flexibility and the customization part, I'm not sure how many people know about it or talk about it actually.
Correct.
Right.
So this is the one consideration. Second thing which I think, I mean, and when I say this, not in the isolation that only one or two things should be looked into it. When they do the research, there's multiple things should be looked into it. So one is the prices they should compare, but prices should not be the sole criteria, because many companies which are offering the best prices, they may not be good in from perspective of the claim settlement ratio, or from the service delivery perspective, right? So it has to be a holistic approach basically. So they need to look into the claim settlement ratio, what is the financial standing of the insurer, so that they can pay your claim in time, and what are their service delivery levels. And apart from that, many term plans offer additional coverages, basically in the form of riders. Now what do these riders do? They make your entire protection as a more comprehensive solution, while death is already covered through term plan. And if you think that you need to have additional coverage against the death benefit, or total permanent disability, or let's say you want to cover any critical illness where you get the fixed amount, lump sum amount on diagnosis of certain critical illness, so you can add these riders. And these riders again, they're optional in nature. The person can decide to have it or not to have it, and there's only nominal cost which the companies charge, right? So these are few things. I mean, in my opinion, there can be many more, but few things which person should look into while buying a term plan.
Understood. Uh, so, Ashok, you have been in the industry for a very long time, and you might have seen multiple cases throughout your career, right? So, I actually wanted to know from you, like, what are some of the most common mistakes you see people making when it comes to buying a term life cover?
So, see, I believe currently not many people are aware of what all things needs to be considered here,
Right.
and probably it's lack of awareness. So I'm not sure that should we call it mistakes or not, because they are buying to the best of their knowledge, and
That's true, yeah.
they believe that they're doing the best thing. That's not mistake, but the problem is it's not their mistake. Probably it's lack of awareness, I would call it. So broadly, if I would say, first of all, the people should buy it when they are young, when they start earning. As I said earlier, that this protection plans, they make the foundation of your financial planning, because at younger ages the premium installments are lower, and they're lower for throughout the policy term which the person has chosen, right? It's not only first installment, it doesn't change age wise as they increase, as they progress in their life.
So it doesn't like how it doesn't have insurance.
It remains constant throughout. If someone has chosen a policy term of 40 years, if someone is 25 years old, he buys the term plan then and there, and he purchases for 40 years, so his premium remains constant for entire 40 years. No change in the premium amount.
So, as in, can you say in a way that your premium actually becomes more affordable as you age because your salary would have increased by then, and you're still the cost of inflation is taken into account, but you're still paying that older premium rate.
Correct. You can say that.
Right?
Yes.
Very interesting.
So this is the first point, first and foremost, and very important point I would like to put across here. Then, secondly, as we discussed, that one need to know what is the right coverage amount for you. Otherwise, what will happen? You will end up being underinsured, or probably a very rare scenario, but probably you may be overinsured also if you do not know. And overinsured means where your liabilities are lower as compared to your lesser as compared to your assets. So again, it may vary from person to person depending upon the financial needs and the needs of dependents. Buying any random coverage amount, that 1 crore or 2 crores, the way they show it, I mean, I don't think it's a right way to go ahead. And similarly, like we discussed this thing also, that we person needs to know what is the right coverage term. That again depends upon your what are your financial responsibilities, and by when you are going to be free from your financial responsibilities or your liabilities. So we discussed this also. And then again, do bit research, because do not purchase whatever comes first in your way. And compare the prices, compare the plans, compare the features and the flexibilities which they offer. Do not buy solely on the basis of the prices or solely on the basis of claim settlement ratio. And it has to be a holistic approach. Apart from prices or claim settlement ratio, we need to consider the financial standing of the insurer, how prompt they are when it comes to the service part, right? So these are few things. And most important thing, one should also explore the online purchase option, because online purchase option is like do it yourself. When you do it yourself, you study, you gain knowledge, and you become more aware about what actually you need to do. This helps you compare plans yourself. You can compare the plans, and then you can make a very informed decision. Secondly, through online purchase you get some additional discounts as well. And I believe in online sales or online purchase the process are a bit quicker.
So, Ashok, I'll leave you just with one last question. You explained the whole term insurance quite well, but I was just wondering, like, is term insurance like a one-time buy? You buy it and then are you like completely done? Because like we do with investments, we usually keep revisiting our investment portfolio to check if it is in line with our goals, or do I need to make any tweak to my investment, do I need to readjust my portfolio and all of that. So similarly, should people also look at their term plan every few years? Like, what exactly should they evaluate?
Yes, I mean, again, that's a very important question, Sabri, I must say. You have prepared your list of questions very carefully. Uh, so, yes, definitely, this is the right thing to do because, for example, let's say I've purchased, I've one would have followed the suggestion that buying too early probably, and he would have purchased a term plan when started working at age of 25 or age of 30, let's say. And so he would have purchased 50 lakhs of insurance cover, but 5 years down the line he gets married. So now the responsibilities have increased. Now you have one dependent. I mean, earlier parents were there, now one more dependent. So the responsibilities have increased, so there's additional financial protection is required. So here one needs to review that this 50 lakhs will be sufficient enough. Of course, in 5 years the cost of living has also increased because of inflation. That's one part, plus there are additional member in the family. So we need to review whether 50 lakhs is sufficient. And here the one also needs to take into consideration that as he ages further, the cost of the term plan will increase. So while at this stage, probably another 50 lakhs would be sufficient. 50 already purchased and 50 would be sufficient. But since he's 35, let's say for example, I'm just taking an example. So he's 35 only. So maybe another 5 years or 10 years, probably he will have addition to the family. He will have kids too. So is it right that he should, rather than buying additional 50 lakhs, which is sufficient for today, he should buy 1 crore itself today? Because at age 40, if he purchase one additional 50 lakhs, so that would be further expensive, right? So few things one need to, I mean, these things should be reviewed on at frequent intervals, and this will definitely help the person to mitigate this risk of dying too early. So this is very important. And apart from this, few basic hygienes are also there. I mean, while this is a important factor from perspective, like you gave the example of the other portfolio management with respect to other investments, but so this is important. But there are few hygiene things also I would highlight here. After purchasing the policy, one should not forget to tell then your nominee or beneficiary that I've purchased a policy and this is the life insurance cover. I'm telling you because there are thousands of crores of rupees which are lying as unclaimed with the insurance company, and the major share could be because there was no one to claim it. Probably people are not aware of it, or the nominees may not be aware of it. So one should definitely tell this thing, the first and foremost thing. Not after, in fact I would say not after purchase, at the time of purchase itself, when he's nominating somebody, at that stage, that stage only one should inform. And once the policy is issued and you receive the policy document, it should be informed this is the policy document, because where it is kept, what we are doing with that, the nominee should be aware of it, because it's the policy document which he has to carry, the nominee has to carry while going for the claim.
Understood. Great. So thank you, Ashok. I think I'll let you go now. You actually answered all the questions quite in detail, and I think this is going to be very helpful. Thank you so much for joining us on the Insuring India podcast.
Thank you, Sabri. Thank you for inviting me and having me here. It was great to have discussion with you. Thank you.
Great. Thank you so much. We hope you enjoyed this conversation and learned something new about the most essential life insurance product, which is the term life cover, and hope that we are able to have a more comfortable dining room conversation related to life and make it a part of having a healthy conversation instead of treating it as a taboo subject. That's all on this episode, folks. Do subscribe to us to keep getting notified whenever we drop something new. Thank you and see you next time.